folks, and welcome back to another edition of Money in Motion. Markets are up today despite the bearish price action and I guess just depression through all of last week. Bitcoin really selling off. Obviously, I think the takeaway of last week was like the most long liquidations we've seen since the FTX blow up. So a lot of extreme selling and sentiment and bearish price action. So we also had the COT report. So excited to go through that and look at positioning data this morning. But Monte, good morning. Anything you're seeing out there today, or anything you've been thinking lately?
Yeah, well, thinking about a lot. Thinking about too much. If you
That's
ask
not
my
good.
therapist. But anyways, good morning to everyone watching. What's up, Ross? What's up, Lucas? What's up, Jenna? Hope you guys are all doing well. Had a good weekend. But I want to dive right into some charts and start with Bitcoin because we are at a very vulnerable state here, CJ. The current price action that we're seeing not looking too favorable. However, what I will say is, like you had pointed out last week, massive record amount of liquidations, right? And when you get that, what often happens is people trying to chase that trade, people trying to chase that move to the downside. And we saw it with so many assets, right? Think about even look at Litecoin today being up. People try to chase this trade, this big candle here, expecting it to be a breakdown, and instead essentially just get squeezed out. Now these are perpetual futures, so they aren't dealing with time decay. That being said, someone that sees this kind of reversal formation occurring may panic sell and thus drive price higher. So what I am predicting for the week is not very exciting. It's going to be some sideways price action with Bitcoin, perhaps dipping down into this 25K range. I think that this will be our first retest of 25K, since basically the middle of June. And with that will come some lower levels for the altcoins. But when it comes to altcoins, like I say, you have to pick and choose which ones you want to short wisely. The three check marks that I like to go through before shorting an altcoin. One, look at the volume. Is the volume increasing or decreasing? Two, look at the funding rate. Is it overwhelmingly negative or positive? If it's overwhelmingly negative, stay away. If it's overwhelmingly positive, that might be a good short because then it's a contrarian play. It tells you lots of people are long it, and there could be a flash crash liquidation to the downside, comparable to what we saw just last week. And then lastly, the last thing to look at is sentiment. Is the sentiment for that asset declining? Is it rising? Is it about to dip down into the negative? Ethereum Classic was a great example of where sentiment was kind of a leading indicator for price. I think we'll see more instances of that this week as price action continues to develop. So, although I said Bitcoin's going to be kind of sideways this week, I do think there will be opportunity in the altcoins. However, you have to be very careful after a week like last week. People see those big candles and they think, man, that's easy money. I should have been in on this. They try and pile in and end up getting squeezed out. That is something I've seen time and time again. And I'm sure you have as well, CJ.
Not only have I seen it, I have participated.
Yep, true. Me too.
All right. Let's go to some just overall positioning data. You see this all right?
Yeah, looking good. Yeah.
Okay.
How are people positioned as we start this week?
So, we're getting short signals for equities. However, I don't really want to take these short signals just because it's difficult to get a feel for the overall sentiment of the market right now. You have a lot of people who are saying things like, we need to just pull back 5 to 10%, and then we're going to make new all-time highs. There's obviously still a lot of bears kind of in the macro bearish kind of environment as interest rates remain high here. So it's difficult for me to take a position in equities with a lot of conviction. But, like for instance, we see a lot of dip buying going on in ES. Speculators also bought the dip in NASDAQ. So This is something that sort of happened after COVID, where essentially you had the 5% to 10% initial decline on COVID when none of us really understood the economic ramifications of a lockdown, or at least they weren't being reflected in the market. Everyone bought the dip, kind of similar to what they're doing now, and then we ended up continuing to fall. So COT data, like I don't think it has any predictive ability, really. It just highlights where the potential of a large move could come. So if we keep falling in the NASDAQ, then there could be a potential of a lot of longs who are going to puke out of those positions. Same thing with ES. But then again, we don't have to go down in the short term. And there's another thing that's like really conflicting, I think, and that has to do with the spike of the equity put call ratio that we saw on Friday. Throughout this last bear market, each time we've had spikes of the equity put call ratio go above roughly 1.2 or 1.27, we've seen local bottoms in the equity markets. And this was very prevalent throughout the bear market. The most, really, I think the largest, most prevalent bearish sentiment came, at this higher low when everyone really tried to short it. So it's interesting that we came up to that level last Friday. I think it's a reflection of how much fear is really in the market, and how people are maybe hedging with options while looking for like exposure in the futures markets. Either way, it's tough to gauge. So I'm not really looking at equities with a lot of high conviction. The only thing that I'm really looking towards are a couple setups that I'll try to break down very briefly. I'd say the one market that remains very crowded is heating oil. And you can see a nice rejection that we're getting from the top of this range today. So I think if we do close lower, this is an interesting one, which I may take a short on. We have some defined risk at the top of this range. Decent reversal candle to start the day. So ultimately, we'll see how that goes. But that is one of the assets with the potential for a large move to the downside. And the fact that it's, down nearly 50 basis points with the NASDAQ up 1%, that's, pretty meaningful in my perspective. Next thing I want to move to is just cocoa real quick. Monte and I often talk about the psychology of a market cycle through Livermore's speculative chart. You want to wait, till the 12 point essentially before selling short. In other words, wait for the trend to put in a lower high before shorting, because at least that point you have a point of defined risk. And so when we look at cocoa in this respect, you can kind of see we're starting to put in that second lower high, which could be interpreted as the 12 point. And the other thing is, like, I wouldn't be looking at this unless the positioning was also very crowded. So the fact that we have crowded positioning and we have this technical setup, I think is kind of interesting for maybe a weakness in cocoa. And if we look at like the longer term chart, I do think this next year is highly likely we will have macro mean reversion, like we've had many times in the past. So that's second trade I'm looking at. Two more. Coffee is starting to get crowded again. And there's a lot of capitulation last week after really bearish news. So there were supply numbers. The supply is much larger than folks were initially anticipated. And there was a brutal week in coffee last week. However, we could recover this. And if we do, it could lead to an epic short squeeze. And we saw something similar with soybeans earlier in the year.
Yeah.
This 5% decline and then the subsequent, we went down like another 3%. That was after a bearish WASD report. Supply came in higher than expected, forcing price down. However, once the shorts got forced out of the position and we reclaimed those losses from the WASD report, we saw an amazing short squeeze. So that obviously doesn't have to happen in coffee. I'm not necessarily predicting it. I'm just saying the circumstances that kind of led to that short squeeze are similar to coffee as they were for soybean oil. And then the last one is just platinum. We talked about that last week. So overall, that's what I'm looking at this week. Bitcoin's coming back a little bit to start the day. So I don't think it's worth like bearish bets on the stock market. I'd still rather do it in energy.
Yeah, I'm with you there. I think you made a good case for that just now. Lucas asked hey guys, tell me what to buy. Unfortunately, Lucas, I would be doing you a disservice if I told you to buy anything right now. I think, if anything, buy puts, maybe. But one chart that I do like to the downside, um, and this is one that I'm not in right now, but it's showing like a technical formation that kind of reminds me of like almost like what you just showed with Platinum, CJ. But that's Adam. And this is from a while back. I can delete this. But you can see how it was kind of similar. Like we had this bearish engulfing candle after what had been 3 days of short squeezing. This thing didn't move as much as some of the other altcoins when we saw that flash crash liquidation event. And there weren't that many profits to be taken. So therefore there was less, of a move to the upside. Now it's moving back down. A breakdown below essentially 7.15. I think this thing plummets hard. So that would be my ideal trigger for entry would be, maybe just set a trigger for entry right around there, 7.185. If we break down below that level, I think this thing falls hard, and I will be entering that trade if it presents itself. So, but that's really all I got for today. Nothing that I'm going to be buying.
I mean, the equity market could rebound here. Although I suppose anything could happen, but we are bouncing from the support range lows and a lot of stuff. Tesla and Nvidia come to mind, so it's nice to see the Nasdaq lead on the way up, as
Right.
opposed to leading on the way down.
Yeah, and we have Nvidia earnings this week as well. Definitely worth mentioning. Those will be on Wednesday after hours. I believe you were discussing that with some members of our Discord. But Wednesday after hours Nvidia earnings, that will be very interesting because if you really think about it, Nvidia has been kind of the catalyst that kicked off a lot of this price action in terms of like speculation into AI and what stocks would benefit from AI. So seeing their earnings and how the market responds to their earnings, I think is going to be really important for deciding like how this AI trend in the future and how people choose to trade around it. I think this will be a really important earnings report for them. I personally have no stake in it. I'm not going to guess whether or not they're going to beat or miss because that stock chart is just absolutely crazy and like it's so speculative driven right now and not driven by like hard numbers that I can't plausibly make an estimate about what their earnings are going to look like. I don't think anyone really could without inside information. So you would think they'd be good because like the AI wave triggered a lot of people into investing into processing power, a lot of not just people but enterprise based like startups and companies as well. So you'd suppose the speculative nature that I'm getting into now is you'd suppose that they would sell a lot of graphics cards um, as a result of that higher demand for processing power. But as a consumer, this is anecdotal, I know. Like I often check the prices of graphics cards whenever because I'm always looking to upgrade mine. And I haven't seen an increase in price whatsoever. It's the same price that they were 6 months ago. So that's indicative of no change in demand. So I'm really interested in that earnings report. I don't, like I said, don't have a horse in the race other than my graphics card and my computer. But that is really it. And I think that earnings report could really dictate what we see in a lot of the other big tech names as well.
I did see that a lot of executives disclosed like very large sales. I think over 200 million in certain regards were sold in terms of stock, and not one executive bought. So that's interesting. But yeah, last thing.
What you got for us?
Um, it's not really market actionable. I just saw this article that the Wall Street Journal published this morning that I thought made an interesting point, kind of after a lot of people, especially just like the media, giving a lot of credence to Burry's prediction of like the stock market crash and how to get rich off a crash. And I'm already devolving into a big short rant about millennials losing money. But let's just. I think this is a good point, not only about like the Big Short, but just experts in general and watching pundits on TV. So this is what it was an excerpt from the article that I liked. But numerous studies of expert opinion have shown that pundits are, as a group, as accurate as a coin flip. Some have a special knack for being wrong, though. In an analysis of 68 stock market gurus several years ago, CXO Advisory Group and Prechter at dead last. The explanation is simple. According to Predicting the Next Big Thing, a 2010 study by these two people, people who got rich and famous on extreme bets tend to follow up with more of them, and outlier predictions typically fail. This kind of reminds me of when
3AC.
well, yeah, I was gonna say it reminded me of Tim Draper, because he was originally right in
Yeah.
I think he predicted 10K in 2017, and then he predicted 250K by 2022, which arguably may have happened if we didn't
Yeah,
have the
yeah.
explosion of altcoins. Like, we did have trillions of dollars go into the market, so he wasn't that wrong, but um, that makes perfect sense. Like, the more extreme bets you're going to make over time, like, the more you're likely to be wrong. So
Yeah.
it's clickbait. It's provocative. It gets the emotions going. You're more likely to click and read something or comment on something if it evokes emotion, as opposed to just being a rational piece of data, which is kind of why I'm sick at the current state of humanity and the loss of attention that we all have. But anyways, I don't know how we got onto that topic, but I'll pass it back to you, Monte.
We were talking about it before the show, to be fair, and yeah, no, I mean, listen, that's just the way it is. Like, that's just the way society is. Like, media consumption and attention spans are getting shorter. People want to just hear a name, a percent, and that's it. Like, you got TikTok, you got Instagram shorts, you got YouTube shorts. All of these things are making people want instant gratification. And like, unless you take the time to actually learn like the what's underlying, and like and take the time to learn why the person's taking the position they're taking, you're gonna end up losing most of your trades, because people making extreme bets follow up with extreme bets, and if you try and follow them, you're gonna end up losing. We've seen it in crypto. I could name 10 people off the top of my head that I know that have blown up by making extreme bets, because they made one extreme bet that paid off, and they thought that, oh, I'm a genius. It's a fallacy that many people fall into, and I hope you guys do not.
I wish there was a more conclusive endpoint to this today's show, but if we answered the question, time to buy the dip, maybe in certain stuff, maybe not so much in others. But judging by the COT report, it is interesting to see large speculators continue to buy into this downtrend. So just got to see if price rebounds for the time being. But just focused on the process and making adjustments as need be. Monty, you got anything else?
No, that's all I really got. I know everyone loves buying things, but you can also make money on the downside, not just in crypto, but in equities as well. And something that I'm working on is an options education course. It's pretty much completed. We just need to create a space for it to live. But if you have, in the meantime, any questions about how to express your opinion on the market using options, I am always available in the Discord. You can always tag me, ask me questions. Come on in. You can try it free for 14 days if you're not a member at tradethechain.com. So definitely check that out. And if you want to learn how to, perhaps get some exposure to the downside, or even just like hedge or anything like that, I'm always more than happy to help. And I know CJ is as well. But that's all I got for today. Please like and subscribe. It really helps out our channel with the algorithm and helps get more eyes on this show. because, as CJ said, the attention span of the public is getting shorter and shorter.
That's why I have to make these ridiculous titles. Last video was our most viewed video because the thumbnail and there was warning signals and all caps in the titles. Get used to it.
Yep. Hey, you gotta do what you gotta do. And what? Okay, we'll end it here. Have a great day, everyone. Love you all. Thank you so much for watching. Happy trading. See you in the Discord. Take care.